So the impending recession is probably something that we see in the news every day as days goes on. And we will only see more and more signs like the tech layoff, housing prices dropping, and bank interest rates going higher and higher. So some of you might call it a self-fulfilling prophecy, but whether it is or not, it's always great to be prepared for such situations. Like with the current situation that we are in, there are a few ways that we can navigate this situation to give us the best chances of maximizing our funds and coming out of the recession with somewhat people call the great wealth transfer. And hopefully the wealth will get transferred to us. So right now we have two main camps. So camp number one will be people who will hold cash, and camp number two will be people who will be investing during this period of time. But before we start and dive deep into this, I gotta put it out there that there is no right or wrong if you pick number one or number two, because everybody is different and we got different strategies with our money. So for those in camp number one are people who prefer to hold cash during a recession. So this is a good option, but it's also important to ensure that we leverage the highest interest possible to ensure that our money does not get eroded by the effects of inflation, which is something that we want to beat. So one of the best banks to leverage right now is a UOB One account, which gives you up to 7.8%. But you need to credit your salary, you gotta spend $500 on the credit card, and you gotta have upwards of $100,000 and above to hit the 7.8% tier. So although it's advertised as 7.8%, the EIR or the effective interest rate is somewhere around 5.1 to 5.2%. But if you're at $30,000 in your account, this will allow you to earn a sweet 3.85%. And if you fulfill the credit card spend, the salary credit, which is still pretty easy to do. But if you want a no-frill savings account with pretty decent interest, the CIMB Fast Saver and the Trust Bank do provide 1.5% base interest. So CIMB Fast Saver scales with more money in the bank, which can give you up to 3.5% or an effective interest rate of 2.5% for the first $75,000 that you have. Trust Bank on the other hand gives you 1.5% as a base interest, and if you do 5 transactions a month and you're an NTUC member, this will give you the same 2.5% as well. But it's important to take note right now that actually NTUC member is a paid membership and it's only useful if you are using a membership, and don't sign up for the card unless you really need that 0.5%. So on the topics of banks, we gotta talk about fixed deposits as well. So fixed deposits are like locking your money in for a period of time with the bank, and interest will be paid out to you after the tenure of the locking period. So the last few months, the fixed deposits rate were pretty steadily rising, and it could be a good opportunity to grab hold of these instruments as well. So many might be uncomfortable with having their money locked for a long period of time, but currently there are a few banks that offer FD or fixed deposits as short as 1 month and some stretch up to 24 months. So for example, ICBC, they offer a 3.6% interest on a 1-month fixed deposit with a minimum of only $500. This is really good because if you look at SSB or T-bills, it's almost similar to those rates, but SSB usually is a long-term hold and T-bill locks your money for a period of 6 months. So let's say if you were to put $500 into ICBC today for a month, you roughly get $1.50 of interest. So this interest might be really tiny right now, but remember that your money is only locked in for a month. So this could be a pretty good place to put your emergency funds because 1 month is considered a pretty short time for an investment. And technically, after the 1 month, you can always renew this fixed deposit, which can sort of give you a steady stream of passive income. So although fixed deposits can seem pretty attractive with low risk and short lock-in periods, we got to accept the fact that with higher risk comes higher rewards as well. And by doing fixed deposit, we sort of lower our risk to almost zero, but in turn we get much lesser gains as compared to the market. So if you are in camp number 2, where you feel that investing will give you the best benefit in the incoming recession, you are right as well. So during times of recession, the economy shrinks, spending is cut to conserve cash to pay for daily expenses, and chances are some of us will lose our jobs, like how Google laid off 12,000 employees overnight. And when all of this happens, the stock market tends to slower amid slower economic growth. And to leverage on investing during a recession, one will have to require a huge sum of cash holding that can be activated or deployed at any point in time. If you're looking to invest during an economic downturn, there will be quite a lot of guts required, and also discipline as well, to buy without fear and to be not afraid of price tanking in the short term.
Gotta have the guts.
And this can kind of affect your mental health and might lead you not to focus on work or worse still, make you underperform and you end up losing your job, which isn't something that we want. So to really take advantage of the stock market during a recession is to invest in really quality companies via dollar cost averaging regularly. So what you can do is to set aside a fixed amount to purchase a stock that you believe in. So this can be something like a blue chip stock, blue chip ETF, or even a dividend king. So at the end of the day, the main objective here is to have exposure in the market that allows you to take advantage of buying at low prices and selling it at a much higher price when the economy recovers.
Buy low and sell high, is to buy cheap and sell expensive.
So both these strategies can seem pretty appealing right now. And as we are all working adults, we got to limit on how much our wallet can afford, and we still got a life to live as well. So my strategy is to put a percentage of my salary into stocks, and this will be done every month without fail. Just like dollar cost averaging in, so I constantly get exposure, and this allows me to accumulate stocks as well. For my cash portion, I'll be leveraging the UOB1 account to get as much as possible from that 3.85 or the 3.9% for the first $60,000. And because I do have a HDB coming up, if I'm too invested in the market right now, this can be a problem for me when it's time for renovation, purchasing your furniture and appliances, and therefore I'll be holding a little bit more cash right now. So all these are my own opinion and what I sort of plan to do, and they might not be suitable for everyone because of the different circumstances that we all have. So before you do anything, it's wise to do a little bit of research and also to do a bit of planning about how much money you have, what you have invested, and what you have not invested in. So I do hope that this video has given you some value or some idea of what you can do with your money during a recession, and I'll really appreciate it if you could drop us a like, subscribe, turn on the notification if you haven't, and as always, stay safe, invest safe, and I'll see you in the next video.